But for me this week, the stock market has pummeled me. It really has, and I can't figure out exactly why. And I think it's all coming down to these interest rates, right? So interest rates are, particularly inflation here in the UK has gone up, and the Bank of England have said interest rates are going to go up. European Central Bank is no different. In fact, they're going to do it worse as far as I understood. You'll have to forgive me because I haven't been looking much over this week. But the biggest thing was Jackson Hole, and I think Steve W has a bit of information on that.
Yup. Just to take us back 2 weeks for a moment, when we said Paul is definitely not suffering for his comments about North Korea, he's now come back with a Korean ETF from his travels over the last fortnight. We're not saying anything in this about where he's been or what conditions he's been kept in over the last fortnight or so, but it's very nice to have you back, Paul. Join in next week when we start learning about. Well,
tough.
Next week we're discussing politics. I think it's like Tory leadership stuff. Anyway, Jackson Hole. Jackson Hole. One of the many counterexamples to the claim that any hole is a goal. Jackson Hole is where the Fed has a meeting, and they talk about roughly what they think monetary and economic policy is going to be like going forwards. And going into it, nearly everybody said Jerome Powell has to be hawkish. He has to be aggressive. He has to talk about hiking rates, reducing monetary supply, and so on and so forth. And he did. And the markets went down quite a lot on this basis. And that surprised none of us, but it did surprise some other people. And if you consume much, if any, kind of US-based financial media, you'll have heard the words Fed pivot and tapering and that kind of thing quite a bit, because the last time Powell said anything of any significance, what he said was something like, at some point in the future, we will stop raising rates. And there were sort of two lines of response to that. The first line of response was, well, yes, that's very obvious. At some point in the future, you will. No one expects you to raise them into infinity, so presumably there will be some stopping point. Anyway, back to business as usual, get back to hiking things. And then there was another kind of line of response that said, well, yes, that is very obvious, so that's not what he means. What he's doing here is bringing to your attention the fact that he will stop hiking rates at some point, which means that point is sooner than a lot of people think. So will it be in, say, 2023? Because they're starting to... And when people start thinking this kind of thing, they start finding evidence to support that, like strong retail earnings and jobs reports and all these kinds of things, and they start looking at them positively, and the market starts going upwards. And then Powell says at places like Jackson Hole, no, I didn't mean that. We're going to keep hiking rates, like quite a lot, because inflation's still really, really bad. And then markets go down again because that Fed pivot thing turns out to not have been a sort of Fed pivot after all. In UK terms, we're roughly similar, I think, to the US in terms of inflation and interest rates, in the sense that I was looking at both sets of CPI. In the UK, it's CPI, Consumer Price Index, including housing, for what that's worth. But as I was reading it, and I think I read this right compared to the US CPI, in both cases, if the CPI number goes nowhere until December, you'll still be looking at an inflationary reading of 6.5% year over year, basically. And if you think interest rates are going to stay at 1.75, which is what they are here, while the Bank of England, is targeting 2% inflation, and inflation's running at 6.5%, I find that difficult to believe. So I'm expecting more rate hikes to come, and I'm expecting this market to go downwards as a result of that, basically.
Yeah, interesting that everybody said that he said, oh, we might one day stop raising interest rates, and everyone thought, oh, that'll be next quarter then. Like, how did we just get there, you know? And I'll say what Steve D said just before we came on air. Who thought this was going to be different? Because we all, us three, agreed there's going to be no change, and it's probably going to still go up for a little bit. Jerome Powell is always going to go a little bit further than necessary to attempt to curb the inflation, even if we are at the peak of inflation right now in the US. So who were these people that thought it was this massive pivot, or is this just another big ass news cycle that we need to ignore?
I think there's still a lot of money out there, isn't there? I think that's the problem. There's still a lot of money out there floating around the system, and I think a lot of people are obviously trying very hard to get what they think is, or what they hope is, the bottom. I think I mean, we're not. You should be quite accustomed to suckers rallies by now. We've had quite a few suckers rallies just in this period, but also during COVID, we even had a few suckers rallies at times. Maybe COVID was one big suckers rally. You know, that's potentially.
For some stocks, it definitely was, right?
Yeah.
Yeah.
The interesting one for me was Elizabeth Warren. I don't know whether you saw her comment. She was very angry with Jerome Powell, and she said, "You know what's worse than high inflation and low unemployment? It's high inflation with a recession and millions of people out of work. I hope you consider that before you drive this economy off a cliff." Now, that is literally the most moronic statement I've ever heard in my life, because she has literally partied to a lot of this free money, even in opposition. You know, the Democrats waved all of this free money, all this stimulus, all these problems through. They've continuously kicked the can down the road, both Republicans and Democrats. And what on earth does she think the alternative is? You can have high inflation and low unemployment. Well, that's no good for anybody. Do you know what I mean? High inflation, a recession, and millions of people out of work. But that's no good either. But, you know, America needs to evidently reset. It's gotten itself into a bit of a pickle, and it literally has been kicking the can down the road with QE for about... Well, since 2008.
Since 2008.
And, you know, and this is a drug that's very, very difficult to wean yourself off. And Elizabeth Warren is one of the longest-serving senators in the... well, she's a congresswoman. I can't remember which one she is, but yeah, she's been one of the longest-serving around. So it's a pointless statement. It's a pointless political attack that has absolutely no hope of helping. So yeah,
sounds
I think
good though, doesn't it? Sounds good to
it does sound good. Yeah, because it sounds like she
suppose.
cares, but the fact that Jerry, she might care, but she doesn't have a clue what to do to fix it. And unfortunately, the people who do are, you know, they're going to push America into recession because that's what has to happen.
Yeah, that seems to me to be the right thing to sort of think here. I'm thinking about jobs reports and so on, and if we sort of take off our investing hats for the moment, which we, you know, wear for the purpose of this show, do we want to see people unemployed anywhere? Not really. Do we want to see them getting paid better? Almost certainly. The trouble is, higher wages, more people employed is inflationary. It makes them spend more money, which drives up prices, which is basically what inflation is. So the trouble with that thought here is that, there's going to have to be some unemployment coming out of this, or there's going to be wages going down or something like that, because that is how inflation is going to get unwound, from what I can see of it.
Just before we shuffle on again as well, two things from Jerome Powell's in the last speech. Remember, he did talk about you know, that at some point in the future they foresee not having to raise interest rates, which, you know, that is one way of presenting the future. In this one, he kind of dialed that back and said that he's now going to use the tools forcefully, and there will be some pain. They're complete different positions, and if Powell has, since he's been in charge of the Fed, he's really tried hard to be to communicate a lot more with people. So you're getting a lot more information out of the Fed about what they're trying to do than previous Fed chiefs. You're almost constantly getting a stream of Fed information. The problem is that their positions aren't always they're not always in sync with each other. They don't often flow one from the other. So, and I think that's the problem, is the market is reacting on an earlier statement where he said, well, things look like they could be getting better for the market, and now he's saying things are terrible. There's going to be pain, and you're all losing your job. And I guess that's the opposite. You know, that's why we're seeing what we're seeing. This week.
Yeah. Final thought from me on this one as well before we kick this along. If it is the case that I'm wrong about this, and Powell ends up cutting interest rates sometime before this time next year, I would view that very, very negatively from an investor perspective. Stocks will go up, and I think there's a decent chance I will start selling stuff that I wouldn't otherwise plan on selling, because that is unlikely to mean that inflation is under control. What it's more likely to mean is that something is going massively wrong, and we're getting an extremely quote-unquote hard landing here, and they're having to back out of their plan to sort the economy out. I think a cut in interest rates, which will force stock prices up, is going to be very bad. It's going to be a bad sign about the US economy, not a good one.